Time for another edition of Mortgages from A to Z, and we are all the way up to the letter J. So J's a fun one. We're talking about joint mortgage applications. So what does that really mean? So there's some misunderstanding around what it means to be a borrower on a loan. There's a couple different versions it could take. First and foremost, a joint application means that there's more than one party on it. And traditional residential mortgages will allow for anything from 1 to 4 borrowers. You can do more. It gets very complicated and it's not usually recommended, but you can certainly do more applicants. And that usually plays into things like second homes and investment properties that are being done as partnerships. But in the joint mortgage, all application data has to be considered. And you could take the place of somebody who's borrowing as an occupant borrower or something called a non-occupant borrower. And we'll talk more about that when we get to the actual ends. It determines basically who's going to be living in that property. And it really only pertains to primary residence. If it's an investment or a second home, then it doesn't necessarily apply because it won't be occupied as a primary home regardless. So that joint application, the common misunderstanding is if one entity is more qualified than the other, we'll just use their data. It's always going to be the lesser, specifically as it relates to credit score. So the lower of all of the applicants' mid-credit score is what's used for decision-making ability. So just remember, a joint mortgage is a very good way to create opportunities to purchase where you may not otherwise qualify. Bringing in people that are willing to act as co-borrowers will enhance your approval. And again, that joint application is critical to making home ownership possible.